Sir, my first question is, given the current global geopolitical tensions and trade uncertainties, how do you see the Indian economy doing this year and next year?
Well, certainly the trade tensions are negative for both in terms of our exports as well as investment. But you must remember that there are opportunities also in what is happening to the extent that India is perceived as a alternative route to some of the other regions like the United States than, for example, manufacturing in China. It gives us a potential opportunity depending on where the tariffs end up. If the tariffs on, say, China and some other parts of Asia are much higher than the tariffs that are on India, there may be some opportunity for some manufacturing to flow to India. But you must remember also that Indian exports in manufacturing to the United States are not that big. And so, any kind of tariffs will have some modest dampening effect, but not a lot. So, bottom line, I think our growth has sort of settled at the 6 to 7 range. A fraction of a percentage point or two maybe affected by the global sort of tariff environment. But longer term, this could spell opportunity for India.
And sir, US President Donald Trump has said that the proposed trade deal with India would be on the lines of what America has finalized with Indonesia. But giving access in the agriculture sector is proving to be a political issue for the government. So what should be our trade policy vis-a-vis the USA?
Look, I think that in any kind of negotiation, we have to look to see where we can be benefited by the negotiation. And certainly in areas of sort of foreign direct investment in some areas of manufacturing. Foreign direct investment, I think, promising a level playing field to American producers who want to invest in India is a no-brainer. Is very clear that we should do that, and we should commit to the same rules for American firms as well as any other foreign firm that our domestic firms enjoy, and we should sort of expand the foreign direct investment from the levels it is at. As far as tariffs go, I think there are certain areas where we have become more protectionist. Certainly, we can reverse that protectionism. But also, there are areas where we have historically been protectionist, for example, on cars. And so bringing down the level of tariffs somewhat, increasing competition in those sectors can actually be quite beneficial because we have large producers. And if they're propelled by competition to do more, and they have some advantages, they produce certain kinds of cars very well, bringing that competition is not necessarily bad for India. So, these are places where it's easy to bring down tariffs and to also promise, clearer, transparent regulation, and it'll also benefit our industry. I think where it is much more difficult is in areas such as agriculture, where every country subsidizes its producers, and our producers may be relatively smaller, may have somewhat lower subsidies, and where the margin, because they're low income, the kind of harm that unconstrained flow of agricultural products into the country may create problems for them. There we have to be very sort of clever in negotiation. Are there win-win situations? For example, can we encourage more foreign direct investment from those countries to enhance the value added in some of those sectors. In milk, for example, sort of improving the value added in our milk products, milk powder, cheese, etc., could be beneficial to our milk producers. Are there deals we can do there rather than necessarily saying we welcome sort of more milk into the country from other countries? So all this requires very careful, clever negotiation, and I hope that is what our government officials are engaged in.
So the Monetary Policy Committee has cut rates thrice in 2025, including a 50 basis point in the last policy review. So do you think that the RBI rate cuts will finally nudge corporates to invest more in India? I mean, nudge their investment plan in the ongoing fiscal year, sir?
So, I mean, this is the mystery that we've had now for nearly a decade, maybe more than a decade, since the early, 2010s. That industry doesn't seem to be investing. After that massive expansion in investment before the global financial crisis, they have become much more circumspect. And they can't keep saying it's the condition of the domestic economy. Earlier, it was the lower middle class isn't spending, the rural areas aren't spending. Now it's flipped over. It's the upper middle class which is not spending. But you have to ask, why aren't you investing, say, to produce for the rest of the world? Why is it that it's only the domestic economy that you're focused on? And for some reason, investment has been very, very tepid. And I know the finance minister has made this remark on a number of occasions. It's always going to come. There's something holding it up. And as you correctly point out, interest rates was an argument, but I don't think that can any longer be an argument. I don't think that necessarily this will be a magic bullet to propel investment, but I do think that some of the other factors we've talked about, creating more of a transparent sort of playing field, and creating more competition in a number of sectors will urge industry to be less complacent and more focused on investing to preserve, their advantage and their lead. So I don't think it's just interest rates. I think it's a combination of factors, but I hope that we will sort of turn the corner and more corporate investment is forthcoming.
The CPI inflation has fallen to 2.1% in June. So is there room for RBI to cut more for more rate cuts? Is there any room for RBI for more rate cuts, sir?
So I don't like to comment on RBI policy. Let me just say that we are in a very comfortable situation as far as inflation goes, and to some extent, the tariffs on imports in industrial countries, which may sort of propagate from the US to other countries, tends to be disinflationary for countries that export. And so that will add to the disinflationary process. I wouldn't pay as much attention to headline inflation, even though that is what the RBI is targeting, when a big factor in that headline inflation is food prices primarily. It's important, but I would also take a look at core inflation at such times, just to satisfy myself that the disinflationary impulse is across the board. And if you look at core inflation, it's somewhat higher than the headline number. And I think it's at a comfortable level, but interest rates are not at this point overly high after the cuts that RBI has made, and it has some time to see how things play out.
Sir, in 2016, the RBI became an inflation targeting central bank with a focus at 4% of inflation. So have we tied our hands with these targets? Should we have a slightly higher inflation target for a growth economy?
I think it's a reasonable target, and the reason we set it at 4, the midpoint of the range, of course, it can be between 2 and 6, is precisely for the question you're asking, are there shocks that could move you to maybe higher inflation? Should you be overly worried if it does that, or should you, over time bring it back to the midpoint of the range? And that's precisely what the RBI has done. It was a little more accommodative during the pandemic when there was a reason to be accommodative. And now, when things are sort of coming into shape, inflation is at a reasonable point. I would say, in praise of the RBI, that the way the inflation targeting framework has worked out and the way it has implemented it is one of the bigger successes of recent times, bigger economic successes, and the RBI should be praised for it.
Sir, FDI has been a bit volatile. There has been a surge of there has been surge in outflows that we are seeing. So does that bother you, sir?
Well, FDI is a complicated. It's not just people putting sort of money on the ground in greenfield projects. Sometimes, what they take out in terms of dividends, etc., counts negatively on FDI. I do worry that given the sort of push in a number of firms for an alternative to China, China plus one strategy, we should be getting much more of that kind of FDI. And of course, we should be getting FDI which seeks to find a place with good logistics but reasonable workers, much like some of the southern states are attracting that kind of FDI. I've heard employers say we want the disciplined workforce, especially the female workforce in the South. We have to make sure that our workforce across the country, male and female, attracts that kind of praise and becomes the reason for FDI. But yes, is it a worry that we're not getting more FDI? I think the answer is yes. Can we benefit from more FDI? I think the answer again is yes, especially technology transfers, and we should try and attract more firms, not just in low-skilled, low sophistication industries, but even very sophisticated industries to come to India, and that way we will learn from them.
So the states want higher devolution, and the 15th Finance Commission is still at work. So what would be your suggestion to the Finance Minister, sir?
Well, I hesitate to offer suggestions to the Finance Commission, but I certainly think that the trend in previous finance commissions has always been to devolve more funds. The big issue in the past was devolving funds from center to state. Now we need to focus also on devolving funds from state to municipalities, to panchayats, etc. That third level of devolution is what we need far more of. And if you look at, for example, the government of China or the government of the United States, the number of local employees there, local government employees, is significantly higher than the share of local government employees in India. And I think by those kinds of benchmarks, we need to decentralize more. We are a large country which is overly governed from the center and state capitals. And I think decentralization will help us tremendously. I think the Finance Commission should focus on making that happen through carrots and potentially sticks.
So according to Morgan Stanley estimates, a record 23,000 millionaires have left India in the past 1 decade. That is roughly over 2,000 a year. That is over and above the millions of students and professionals migrating overseas every year. Is it really a matter of concern, sir?
Well, I don't know how much weight to put on that statistic, and I don't know what to compare it with. Ideally, we should compare it with other developing countries. It is natural to have some immigration, And of course, rich people might find it easier to live in a foreign country if they have enough wealth. I know that in summer, a lot of the Indian elite show up in London, where the climate is more sort of is bearable, and the delights of a major capital like London are there to enjoy. So until I understand better what this implies, how it is compared to other countries, I don't know that this number by itself tells me very much. I do think that if we do find this number is excessive compared to other comparable countries, we do need to go into why this is happening and how we can remedy it. But because having wealthy entrepreneurs in the country, and I'm not saying all these wealthy people are necessarily entrepreneurs, but assuming they made their money through some kind of business activities, we need to understand whether they are leaving because they feel there is some kind of a bias against business. If that is the case, we should remedy it. But until we understand this better, it's very hard to suggest policies.
Sir, we have seen more than 3 decades of economic reforms and liberalization. So, are there a certain sector which still require protectionism, sir? Protection.
Well, I, I think that without ruling out a policy tool like protectionism entirely, I think any kind of protection has to be temporary and targeted. It can't be across the board. It has to be temporary. It has to give breathing space. But any protection to one segment of the economy is a tax on the other segment of the economy. If we protect our steel manufacturers, then we are taxing our car manufacturers because they have to pay higher amounts for the steel inputs that they need to produce their cars. So we make our car manufacturers uncompetitive in the global market. So broadly speaking, we should bring down protection. But where we have protection, unless we think that the producers are incapable of holding their own and are very important to preserve, I think by and large we should have a sense that any protection has time limits, and it will be removed on that basis.
Sir, what is your assessment of the PLI scheme? I mean, it was launched 3-4 years ago, sir.
The answer is I don't know. I don't think we have any strong public data out there. I do know that we are exporting more cell phones, whether that's because of the high tariffs we put on cell phone imports and therefore created some production assembly in the country, which then allowed us to also export backed by some of these subsidies. I don't know. I would think, as with all government programs, there is some success, but has it, done enough to move the needle on jobs in a big way? I think, at least as far as the job numbers you see in the periodic labor force surveys suggest, not yet. Again, I think it's important to collect data on how this scheme is performing and then take a view as to whether it should be continued and where. But until those data are collected and made public, and I'm not aware of obviously of everything, but I'm not aware that that has been done. It's very hard to evaluate the system, the scheme.
Sir, my last question is, sir, China is stopping export of rare earth material to India and other countries. So, what should India do to increase its business and industry?
Well, where possible, again, I think we need a strategic view of different industries and ask where we can be held up by bottlenecks and where it's relatively easy for us to undertake production to alleviate those bottlenecks. Sometimes it may be really costly when we talk about high quality chips. That is a potential bottleneck. Some sort of antagonistic power can limit our access to chips. but it's very, very costly for us to have an entire chip manufacturing sector. So we have to find alternative ways of getting those chips if we are denied them, for example, through smuggling, for example, through creating domestic buffers of key chips, etc. So can we build up a strategic reserve of chips? I don't think the idea is obvious. I don't think, but I do think it needs to be explored. That said, I think in some areas we may have the opportunity to produce more. For example, I understand there are reserves of some of these rare earths and so on in Kashmir. Could it be a win-win to create more employment in Kashmir, which is, I think, really very important, both from an economic perspective, but also from a geostrategic perspective. But can we develop those production entities there and create more jobs? That's something that may well be worth doing and give us more resilience and comfort in case other countries stop us. And that could be something we could export to the rest of the world. Again, we need a little bit of analysis and not jumping in without thought, but it is something we have been discussing, and we need to do it sooner rather than later.